Hey everyone, it's Kristen Cayley from Nelson Financial Planning. In one of my prior videos, I gave an overview of the payroll tax deferral that came into play on September 1st. But at that time, there were still many questions left unanswered regarding how this payroll tax deferral would actually be implemented. Today, we'll take a closer look at the additional guidance issued on Friday, August 28th by the Department of Treasury and the IRS. This was issued just 4 days before the payroll tax deferral was set to begin, leaving very little time for employers to adjust for the change. Let's take a look. The notice clarified that the payroll tax deferral is not a permanent tax cut, and those deferred payroll taxes will have to be repaid between January 1st through April 30th of 2021. It is the employer's responsibility to withhold and send the employee share of payroll taxes to the IRS. The notice allows, but does not require, an employer to defer the employee share of Social Security tax on wages paid during the period of September 1st through December 31st of 2020. Since it is optional, employers may make the decision on their own, or they may ask you as their employee whether or not you want to opt in or opt out of the payroll tax deferral. The payroll tax deferral generally applies to individuals with wages less than $4,000 per biweekly pay period. The notice clarified that the amount of wages is determined on a pay period by pay period basis, meaning if your wages fluctuate, there's the possibility that the payroll tax deferral may affect your paycheck for one period but not for the next. If your wages fall within the threshold and you opt in for the payroll tax deferral, either by your employer's decision or by your own decision, your paycheck will be slightly larger for the rest of 2020, but you will have to pay those amounts back in 2021. Let's take a look at an example. Let's say you are a salaried employee that has a monthly paycheck of $6,000. On a monthly basis, you typically pay about $460 in payroll taxes and receive a net pay of $5,540, absent any federal or state income taxes. Under the payroll tax deferral, your share of Social Security taxes will not be withheld from your paychecks for the remainder of 2020, which obviously bumps up your net pay. The amount paid to you increases by $372 for a total of $5,912 per month. Up until this point, that all sounds great. Now let's take a look at what will happen come January 1st, 2021. Your employer will ratably withhold the deferred Social Security taxes from your paycheck starting January 1st and going through April 30th. This means that your employer will repay the deferred taxes by withholding double the amount of Social Security taxes. This now shifts your net pay down to $5,168 per month. Let's take a step back and look at the entire picture. This shift in income is a dramatic change that needs to be planned for. Under the deferral, your monthly net pay is $5,912, but once the deferral period ends, it drops to $5,168, which is $744 less per month. This is a drastic difference that you need to be aware of beforehand if the payroll tax deferral applies to you. As you can see, the payroll tax deferral is pretty complicated and needs careful planning if implemented. While the guidance that was issued answers some questions, there's still many left unanswered. As we find out more, we'll create videos to share with you. Please visit our website or call our office to schedule your free initial consultation. Thank you for listening and take care.